Good morning. First live stream on YouTube in like 3 months. Just give me a moment. Can I just get a quick audio check? Por favor. Yes, brilliant. Okay, it's been a while since we've done a live stream on YouTube. I haven't done one of these in months. We've just been doing them in the mentorship for a while now. But I think we'll bring them to YouTube for a few days, maybe for a week. It's probably not working because it wasn't made in America. Who are you? Broke mirrors. Okay, daily chart. We've got a couple potential objectives, daily low, and then I'm not looking at anything to the buy side on the daily chart because there's just no clean level there. We do have stuff on the 4 hour, like our new week opening gap, and then potentially reaching into this level here if we're to trade beyond the new week opening gap. The reason for that is this will have a mitigation function. So if it's not going to be very heavily bearish, it'll draw into that mitigation leg to offer buyer's remorse. We're inside of an hourly order block on the hourly, obviously. 15-minute. So that's only week open. Asia trades a lot lower. We're now inside that 15-minute fair value gap. If you put on the daily chart and this wick and you grade it, you'll see that this fair value gap overlaps the consequent encroachment of that. So that's a significant PDRA that you want to have in mind. London takes out Asia's low and then it runs higher. Doesn't give you a large enough range to really give you a nice trade, but Asia was super large. So large overnight session. That means sometimes the opening 30 minutes can be a little bit subpar. Doesn't mean there won't be any trade opportunities, but it does mean that it can be more fuzzy. You'll see candles are overlapping each other's ranges, and you generally kind of most likely you want to wait for 10 o'clock, especially since we have 10 a.m. high impact news today. 5-minute chart, pretty much the same as a 15-minute, nothing too significant here. You can see the conclusion of London lunch, small range coming out of a large range. The pre-market's not done a whole lot. We do have VSP, which is also our pre-market low. Technically, our pre-market low would be this low, but the VSP's here, so I'll opt to use that. Pre-market relatively equal highs. We'll see how it wants to treat these levels. And this is that 15-minute fair value gap. If you go to your regular trading hours chart, you can see the closing price was 25,648.5. We're now trading around 25,530-ish, so it'll be quite a large opening range gap. Who could this be? I have no idea. You could be like one of a million people, I don't know. Sorry. Maybe it's Peter Parker. The latency shouldn't be that large. There should just be like 5 seconds. I've set it to ultra low, but I don't think there's a way I can make it any less. What's VSP? VSP is that's one of my own things. You know, I have a black belt concept. I also have liquidity concepts. Do you do live trading every day in the roundtable? Most days. Most days. It's typically 4 days a week. Sometimes it's 3, but technically they only pay for 2 days a week and they get 4. So they're lucky. But I don't trade in them, I'm just tape reading with them. Otherwise, I would just be doing a signal service. Here is our 8:30 opening price. Any plans to do TikTok live? But then not should I? I did do TikTok live once, and they do get a lot of views, but they're not nice views. It's just toxic little kids. Whereas on YouTube, everyone's more community vibes. On TikTok, it's just brain rotted children. So I prefer YouTube because our community here on YouTube and in Discord is so much more just nice and easy to be around, easy to talk to. On TikTok, it's like you have to, I don't know, you just have to deal with annoying people. But everyone here is amazing. Yeah, we're just waiting for the open. There's nothing too significant about price action today, I don't think. It's hard to deal with these Asian larger expansions because then it means New York AM can do a couple things. But you just gotta tap dance around and deal with it. There is a nice Asian high. That's on major buy side. I'm mainly gonna base the like the bias based off what the 9:30 open does. I'm coming into this morning quite neutral. I was bearish initially for the daily low, but now I'm thinking it might go for the Asian high first, and if it wants to go for the Asian high, I'll just look at that for the bias. Okay, we'll go to our regular trading house chart. The opening range gap I'll do with a purple rectangle, so it'll be like this. 7:30 p.m. Cumulative equal highs. I'll take a look in a minute. Okay, consequent encroachment already reached. That's fast. So what I'm doing here is I'm just grading the opening range gap. The opening range gap is just the difference between the closing price and the opening price in the regular trading house chart. That's Asian buy side liquidity. just like that. What's this red line? It's nothing. Okay, so that's probably going to take out the Asian buy side, and then we'll look to see if it wants to continue or reverse. We have 10 a.m. high impact news today. It's PMI, so you want to be cautious of that. Regular trading hours is really nice liquidity up here. Really nice. I think we can probably make a run into that. But it depends on how we trade up above this opening range gap, if we trade up above it, and then if it wants to find support from this upper quadrant, and then start rallying, showing us strength off that new week opening gap. That would be conducive, in my opinion, to higher prices into regular trading hours PM session buy side. Until then, we have to wait for a few more candles to form in, show us where it wants to close, and just watch how the bodies breathe. Okay, I'll take a look. 7:30 p.m. smooth equal highs. Oh yeah, that's been taken. Yeah, we marked that out already. I'm gonna remove this. It's too much. $9.30 can be first presented fair value gap today, because if you open outside of the PM session liquidity here, then that can qualify as the first presented fair value gap. Yeah, this looks pretty nice. Well, that's a black belt. Not that you want to trade the black belt on YM, but it is it. Oh yeah, I don't know if I've mentioned this yet, but never try and trade the black belt on YM. It's terrible. Okay, could be a potential SMT. An SMT on this. It's not an SMT yet because you need the next candle to close, but it could be one. And if it is, I would want to see pre-market low. But it's not an SMT until it's a swing point. One candle is not an SMT, especially if it's like this. You need this candle to close, and you need another one because that would make it a swing point. If it's not a swing point, it isn't an SMT. So I'm just marking this out in case it does become one, not because it is one, because it isn't yet. Just to make sure that there's no confusion. If you're looking at this 1 minute chart to be your SMT, it isn't, because if you look at this 5 minute candle on ES, it's traded up above that high. So if you go back to this is traded up above that high. So it's breaking SMTs at the moment. So you don't want to be looking at, okay, trying to essentially predict a turning point based off just an SMT. I see so many people go wrong with that. Just don't. SMT should be confirmation only, and that's why. That's another potential BISI. You can grade this wick. I wouldn't really look to anything other than equilibrium on that one. Get nice and strong. Where can we draw towards? I believe we'll draw into here. Like I just said earlier, when we're seeing strong closures above the opening range gap, that's going to give us strength, especially because it displaced through the high, displaced through this candle's high, and that was kind of the rejection candle. Now you want to see support from these types of arrays. So if you want to grade this wick, just look at the equilibrium of that. You can grade that. You can look at first presented order block from 22nd of January. You can look at that first presented fair value gap. Got a lot of reference points here. I hate that this indicator, every time I put it on, it messes up the chart, like it does that. Okay, so we've got breakaway gap, followed by another breakaway gap. That's indicative of strength. And the first presented fair value gap is also a breakaway gap. When you're seeing these breakaway gaps, and you're thinking, oh, I can't get an entry, it's better that you can't get an entry because, well, not better that you can't get an entry, but better that it's left open because it means it's more likely to rally faster and further. Because we had this retracement here, you can measure this retracement and then project it forward using a fulcrum. Because it's a small one, I'd go with 2.5 and 3 deviations here. They line up quite nicely. And these are not draws on liquidity, they're not PD arrays, it's just a mathematically calculated distribution expectation of where price should go, how far it can go. But you don't really need to do that because we're seeing breakaway gaps, so we're seeing that it should be strong, and it should continue to take out these highs. Inside that fair value gap now, except for this wick. Nice reaction there. That's a grey pool. Touches the grey pool. Okay, you want to see this become a bullish order block within this candle or the next candle. Because you don't want it to linger very long when it's strong like this, because, go back to the electronic house chart. Breakaway gap, not breakaway gap anymore, but we're expecting it to deliver. You don't want to see it linger and hover around PD arrays, you want to see it be reactive. Now, if it's going to give you a down close candle, that's not necessarily lingering, it's a form of retracement, just to put in the bullish order block that's going to use to trade higher. That's fine, but you don't want to see it constantly overlapping the range multiple times, essentially consolidating inside a PD array. It doesn't mean it's not going to deliver, but it means it's going to be slower, and that's not what you want. You want to see it fast and speedy. Also, it is the beginning of a new month's price action, so this is 2nd of February, but it's the first trading day of the month. On the first trading day of the month, you can use certain opening prices and extend them throughout the entire month. So I'm using this first printed fair value gap. This is February first presented fair value gap. I can do this, extend it to the right, and I can use this for the remainder of the month of Of course, if the month expands hundreds and hundreds of handles away, it's not going to be made a reference point in the actual price action, but it can still provide narrative. And this is the first fair value gap of the New York session. So if you go to your regular trading hours chart, what's the first fair value gap? This one, or you can even use this one technically, if you're not a believer in it opening outside the range. And that also means the 6 p.m. opening price. That's our 2nd of February's new week opening gap low. That is a price that you want to have out for the rest of the month. Same with the midnight opening price. So this is February midnight opening price, and I'll have that on the chart for the rest of the month. Okay, there you're seeing the first presented order block from the 22nd of January find support. So this is, if I go all the way back to the 22nd of January's price action. Now this is 10 days ago, and it is relevant. This is the first order block from that New York session on Thursday the 22nd of January. First one. That's the first fair value gap. You can see both of those arrays are being used here. It's being pressed lower by the fair value gap. It's being sensitive to the order block. It's kind of between these two arrays right now. But here it's lingering. This is not what I want to see. It makes it less likely that it's going to have a run of magnitude. So, bit annoying, but it's fine. The PD arrays from your regular trading hours chart, they are still very, very relevant to the price action on electronic trading hours. So if you have, say, you want to use this fair value gap, and it's from the regular trading hours chart, and you extend it forward, it's still relevant. It's still relevant. Okay, not a strong close there, but we are in the upper half of the fair value gap. So hopefully that can provide support. Told you that wasn't going to be an SMT. Nice breakaway gap on ES. ES is nice and strong. It's really going for that PM buy side. I want to see the Nasdaq start following suit. You notice ES didn't take out the low, so we had the low here. Nasdaq opened outside the range entirely. ES opened up here. The distribution asset is the one that doesn't take liquidity. That's the stronger one. ES doesn't, and you can see it's getting towards its objective faster. Nasdaq is taking more time. Why is it that ES is always front running lately? I don't know. $9.30 candle is first presented fair value gap because it took pre-market high. No, $9.30 candle is first presented fair value gap because it opens outside of the regular trading hours range. So if you just look at the PM session, it doesn't even need to be on your regular trading hours chart. Look at the PM session. Have we opened outside of that range in New York? If yes, then 9.30 can be the first presented fair value gap. So it's easier on the regular trading hours chart. It's way easier because you can instantly see we opened up here, So that means 9:30 can be used as a first presented fair value gap. The reason it conflicts, from my understanding, if you open up within it, is because it can serve as a balanced price range. I'm not sure why, if there's 8:30 high impact news, you can use 9:30 as the first presented fair value gap as well. ICT's never really said anything about that, but I guess the assumption is it's going to expand faster, so that's giving you an extra tool to work with. Okay, hopefully now we can start to see this start. There we go, it broke the high. Now I'm expecting that to start rallying. ES has taken out the buy side just about. Hopefully there's no SMTs. SMTs can be annoying because even when they're weak, say this was an SMT between Nasdaq and ES, it can still, even when heavily bullish, provide a retracement, and that can be a retracement. It's quite fast, and then it will go against it. But like, it can just be very annoying because you think, okay, is it going to respect the SMT? Well, it's displacing. When you're bullish, obviously you're not looking for a bearish SMT to be respected. You're looking for it to get run through. But the fact that it's there can still be annoying because you have to deal with a larger retracement. Okay, and there is an SMT, so. Oh wait, there isn't here. This is not selling point. It's nice. This is what I mean when I said at the beginning that we could see some fuzzy price action. The candles are all sharing their range. And because we're encroaching on that 10 o'clock hour where that there's going to be PMI news released, that's what can throw the price action to a little bit of a mess. Okay, looks like we're leaving the consolidation now. We'll look at these random levels from 10 days ago. No retail trader is having this on the chart. Not even one. They're all looking at the 7 EMA crossover. Yeah, still moving just fine. They did have that little retracement. How's YM doing? Not bad. Not bad at all. What does this look like to you? Market maker model? That's what it looks like to me. Boom. Baptized. Another successful New York AM session call. Like the stream. We'll keep it going though. 10 a.m. high impact news, we'll see what it does. it is PMI, so sometimes it can be a bit of a candle, like a day candle, sometimes not. It's funny how we got the exact levels. Funny how that works. Funny how that works. Just gonna clean this up for a moment. I'll leave that on. Let's go 5-minute charts. Let's go 15-minute. No, let's go 5-minute. Original consolidation, distributes to the sell side, and again, smart money reversal takes out sell side liquidity below the midnight opening price. Market structure shift, trades down to that fair value gap. That's the formal low risk buy. So is that. That's accumulation. 930 comes and rallies into the original consolidation. Beautiful. Beautiful. Alright, we'll see if it wants to have some more juice to go higher, or if it wants to consolidate. Don't try and trade it in the next 7 minutes. At least wait until that 10 o'clock news event comes out, because it can just do whatever it wants to do, really, and it's not anything relevant to the story of price. Hello, Otaku. You missed out the call, but hopefully it's going well. I just paid my Wi-Fi bill, so I didn't have Wi-Fi. Oh. Well, I'm glad you have it now. That's nice. Okay, so now we have about 5 minutes of downtime where we don't need to predict anything. We don't need to look at anything. We can just wait, watch the candles breathe, and then see what that 10 o'clock news does. The reason you don't really want to predict anything here is because you're just exhausting yourself mentally until the news comes out, and it can be completely irrelevant until that news comes out. Most of what's going to happen between the price objective being met and 10 a.m. news is going to be mostly tight range consolidation, which is what you're seeing here. What's up? Crisp Bears here. Good afternoon, Crisp Bear. Oh, it's Lana. The most unhinged guy I know. Whilst we wait, we'll just look at how amazing ICT concepts are. Not the fair value of this one. Beautiful. Beautiful. Back down to the order block. Beautiful. Breakaway gap. First presented order block from the 22nd of January. 22nd of January is first presented fair value gap. into the price objective. I mean, come on. Oh, I took this high out as well. Nice. It's Chris Bear. Oh, nice to see you. Two and a half minutes to wait. I'm open to cons from this area though. You're open to cons? What does that mean? Continuations? I would assume it means continuations. Oh, consolidation. Yeah, we've got the news coming out, so we'll see. We have nice draws to the sell side and to the buy side, so I'm not trying to predict anything until that news event comes out. And it could be very underwhelming and not do anything, and then, we just see a standard price run, or just nothing. But that 10 o'clock candle will be the tell. Sometimes PMI annoyingly just does nothing, and, that can make the price action a bit boring. That's not relevant yet. Waiting for 10 o'clock. Daily bias video coming anytime soon. Yeah, I was recording it earlier, and then I realised that the mic wasn't on, so I have to record it again, and then do it again. That happens to me way more frequently than it should. I think every 4 or 5 videos I end up doing that. Yeah, big sigh. It was very annoying. I did just do a black belt video last night, so if there's any black belt trade reviews that I have to do, like if tomorrow gives a black belt, then I'll post a black belt trade review. But if there's no black belt, then I'll try to do the daily bias video. Okay, not a huge candle. Not a huge candle at all. Just warped these little relatively equal highs. We'll see if it wants to reject this wick. Ideally it does, and then we can see a retracement. But why is nice and weak? We'll see if that wants to form an SMT. If it does form an SMT, reversals do look nice. But if it doesn't, then it doesn't. If it doesn't, then I'll just sit on my hands and wait for more information. But if it does, then I'll look for weakness signs. Qualifying the SMT, well, not necessarily qualifying the SMT, but something people just forget about SMTs is there's no SMT if it's not a swing point. If it's just a high, that isn't an SMT. It has to be a swing point. Okay, I still don't consider that SMT. My hearing V say SMT. I have a whole 2-hour lecture on SMTs. I'm not against them at all, just against that guy that you listen to, Mr. 369. Yeah, that's why I said it's not valid anymore, because with the body closed inside the wick, what I wanted to see is a rejection following that candle. Because with an SMT, you have to understand what is an SMT. Well, an SMT, when it's in the chart, is going to be a catalyst that makes price go lower a lot faster. So if there's an SMT between highs like this, and that's the SMT, it should reject it immediately because it should be the catalyst for a down move. And if it's not doing that, what's going to happen? If it doesn't reject it as hard, it's doing like that, it's going to disrespect it, it's going to go through it, because that's not serving the function or respecting the function of what an SMT is meant to do. So because it should provide a catalyst and a faster reaction lower, if it isn't doing that, then you're basically in there looking for that SMT to fail. How to make SMT on the hourly. Right, yeah. I think the draw on ES is pretty obvious. Again, the 4-minute chart looks nice and easy to read. You want to see this become an order block if you're looking for continuation higher. Now, I'm not yet, because I don't see this as high probability enough to really predict anything. But we have draws to the upside. This is what I'm trying to say. We have draws to the upside, and in order for those to be reached, it has to close above this 4-minute order block. It has to, otherwise it's not an SMT. Sorry, not an SMT. A change state of delivery. But it's not high probability enough for me to really stick with that and give it to you as a bias. So just be content with that move. And if you didn't catch it, don't FOMO in. Yeah, I'm not gonna look for a reversal. Same. It's too strong. Not on YM, but YM doesn't need to follow. Strong on ES, strong on NQ. We know ES is reaching for that high. It's not as clean a level on NQ, but it is still present. Grade optimal trade entry. It's beyond 79, okay. Do you look at YM2 for S&T? No. Pretty much never. Sometimes maybe I'll use it to just give me a bit more confidence. Like I think, oh, YM's following as well, which would be nice. But if it isn't, I don't care. If it's correlated, if it's not correlated, if it's an SMT, if it's not an SMT, it doesn't affect me. Not on YM. ES and NQ are where they're at. The strong correlations are between ES and NQ. So if those are out of correlation, probably won't trade. If those have an SMT, that's way more valid than anything else. Going smoothly, it's not giving me shit, but clean pre-A. Yeah, not bad. Not bad at all. Okay, 4 minute order block. Hopefully that leaves a fair value gap. That would be nice. That's strong. What is SL on? That's silver. So it's SI1 exclamation mark. That's silver. No silver bullet today. Not by the looks of it. Just continuations higher, I believe, into these relatively legal highs. But I don't require it to reach up into this. There's low hanging fruit objectives. Yeah, with these. So I'd look at that. That's all I would require out of it. It's not that fancy. Okay, yes, took that high. It's got other things I can reach for as well. So we can see strength to continue on this, potentially. It's a nice little breakaway gap. Ideally this is left open. That would give it a really nice run to this relatively equal highs. And if they leave this fair value gap open, and it takes the relatively equal highs with some displacement, not like back and forth, but just something singular, something like a nice singular price run, 1 or 2 or 3 candles. Because they leave this as a breakaway gap, that would give me more conviction seeing it trade higher into the further away objective. But all I require is this. That's a good start. Monday. That's a good strong candle outside of this range. So you have to view this stuff on a microscopic level when you're just reading the 1 minute chart. That's consolidation. Even though it's 1, 2, 3 candles, it's consolidation. Leaves that consolidation. Now you want to see a couple more, ideally 1, maybe 2, deliver into those relative equal highs. And because that's left open, it would give me more confidence in this becoming, well, this getting traded through and then relative equal highs. But again, all I need is this. Took anything today? No. When should you look at electronic trading hours and when at regular trading hours? You should generally just look at both. So the same way you cycle through the time frames, like you'll go through a 5-minute chart, you'll go through a 10-minute chart, 15-minute chart. You can do that on, you do that with these these charts as well. So regular trading hours. Well, there's specific tools you'll use in regular trading hours, like opening range gap. You can get that from the electronic trading hours chart, but it's way easier to visualize and see on regular trading hours. But this price action is still on the electronic trading hours chart. It's not like this is a new price action or different price action. It's just that there's no trading between 4:14 and 9:30, whereas electronic trading hours has that entire period from 4:14 here to 9:30 included. So electronic trading hours technically gives you more information to work with, and you should use this. Absolutely, you should. It aids extremely with the daily profile and the weekly profile. But regular trading hours, like if you find electronic trading hours is a lot of information, you can use this chart alone and get banger trades. Banger trades. Okay, that's the low hanging relative equal highs. It left this open, so ideally it wants to climb up above this now and essentially staircase. So you want to see it trade something like this, where it's using the levels from here to trade higher. The 27th of January is a new day opening gap there as well. It's 14th. Yes, I've got a cluster of end dots there. I will end the stream in about 5 minutes, maybe a bit less. We've called enough for today. L. You scroll TikTok all day. Don't say L. I end my streams early. When I used to do the streams until 4 o'clock, well, not 4 o'clock, 4 o'clock my time, but 11 o'clock New York time, dead on. The problem is, I force myself to sit in front of price action that I don't want to trade or read. So the reason I end streams earlier some days, or I extend them on other days, it's just based on the price action. It's not based on anything else. because that's how I promote you actually trading and being in front of the chart. You don't want to be doing it every single day until 4 o'clock. You do it the applicable times. When is it high probability? Okay, I'll trade at that point. Now, I'm not saying it's not going to be high probability and that's why I'm in extreme, but if I'm content with what we've done today, which is called the run into these relatively weaker highs, and then to this, I don't need any more. You don't need any more. That should be enough for you. So you have to learn to be content with less, and not even necessarily less, but be content with what you came to get. If you called the price move, even if you didn't trade it, if you just called it, that's good, and you can take your charts off, and that's a win. And we have that concept of Kaizen, where it's like 1% better every single day. That's going to contribute to that. That's a win. It doesn't need to be a monetary win, or a win in your funded account, or a win in your P&L curve. It can be a mental win. It can be just calling it is a win in my book, and that should be a win in everyone's book, because that's a sign that you have the skill set required to make it in this industry. And that skill set is worth more than your funded account, it's worth more than your flipping live account, it's worth millions. Hello, what were you trading? Black Bell? What are you talking about? So I just don't know what the question is. What were you trading Black Bell? Sunrise in 2 hours. Yeah, sure. I can call it most of the time but get stopped out still. Okay, well, you're halfway there, because if you can identify the draw, it's just about getting in sync with the move. If I know it's trading into, I'll just go to a different example. If I know that this PM session is going to trade into this high, this one here, and I think, maybe you won't know for 100% sure, but you'll have the inclination, you have that inkling of an idea, and that's starting to form out and play in the chart. So it gives you this run up, it trades, reacts to that first presented order block swing threshold, trades down to the new day opening gap, reacts to the 23rd of January's first presented fair value gap, then it starts rallying, leaving breakaway gaps. At that point here, when I'm starting to see, okay, my bias is gonna be right, because I'm seeing the signs of strength that it wants to rally higher. Okay, now all I have to do is get in sync with the move. So that doesn't mean necessarily buying the first PDRA. And it doesn't necessarily mean buying your preferred PDRA. But what is a valid, viable entry based on the context and the signatures of strength and weakness that you're seeing. So we're seeing here, if I'm looking at this high to be traded into, if I'm seeing it break away, and then it trades up above this high and it displaces, and then it retraces, I'm thinking, okay, I can enter on this order block here. And my entry can be long there. And a valid stop loss would be this breakaway gap, because this is 20% of the move. It shouldn't come back down into that if it's already given us the market structure shift and it's displacing up above it. Then I can look at this as my objective. That's a 1.7R trade, and that's a very good risk reward. And even if it wasn't 1.7R, it was 1.5R, that's still a good trade. You don't need every trade to be 2R, 3R, 4R, 5R. If you're getting into the move that you predicted would happen, that is amazing. Okay. Bit of annoying retracement there. When I'm seeing a wick like this, and then the body closes like that, it's a deep retracement. I don't like that. I want to see the wicks on the lower end be long and the upper end be short. So like this here, where we had a longer discount wick, and then there's not really a long premium wick. Long discount wick, short premium wick, long discount wick, short premium wick. If you start to see the opposite, that's the first sign it can turn. Now, it doesn't mean it's going to invalidate the entire trade because of one little wick, but it means that if it's going to go into your direction, it's going to have trouble going through that entire wick, inverting it, and then using it to trade higher. It can be a bit higher resistance. So Doesn't mean it's not going to play out, but it just means you'll be waiting a little bit longer. Were you trading black belt today? Nope, we weren't. If you're bullish, you don't trade a bearish black belt. Now, they can work, but I never do that. If I'm bullish and there's a bearish black belt and the opening range gap is like this, and I'm expecting, okay, it's going to trade at the consequent encroachment of that opening range gap, then I might take a move against the bias. But even then it's risky. You want to have your bias, the opening range gap, and the black belt concept on your side. Because if it takes out the pre-market low at 9:30, and the opening range gap is to the buy side, and you're bullish on the day, that is the highest probability black belt you can get. Couple that with an SMT and you've got an A plus 9 out of 10 times it's going to work. So the problems are kind of sorted by entering the price. You want to give it a shot on this. Yeah. Okay, I am going to end the stream here. If you listened, thank you. I appreciate it. Hopefully it was a good stream. I will probably do some more of these on YouTube from now on, like a couple of weeks at least. At least for this month. Yeah, it might not be forever, but hopefully it was useful. Hopefully it helped you. Don't treat it as a signal service or anything. It's just teaching. Yeah. Thanks for listening, and I'll see you tomorrow or in the Discord. Goodbye.